Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are higher this morning ahead of a holiday shortened trading week in observance of Good Friday. Markets remain volatile amid ongoing uncertainty surrounding the conflict in the Middle East, while oil prices continue to swing. Currently, benchmark ICE Brent crude is trading at $114 a barrel. Here's what else is on tap this hour. Our very own Kristen Scholler spoke with leaders of Holganics in a limited series, including Howard W. Buffett, grandson of investing legend and Berkshire Hathaway chair Warren Buffett. You're going to want to hear what he had to say about the latest developments surrounding soil and the agriculture industry. Meanwhile, financial operations platform Ramp recently published new research on the AI adoption race and says one platform is leading the way. The firm's economist joins me to break down the data. And later on, the NYSE sponsored the Hill and Valley Forum in our nation's capital last week. Kristen Scholler spoke with several leaders, including National Cyber Director Sean Caron-Cross. It's an interview you won't want to miss. But we begin with the markets, as we usually do here on NYSE Live. And joining me now is Art Hogan. He is the Chief Market Strategist at B. Riley Wealth Management. Art, welcome to NYSE Live.
Morning, Ashley. Thanks so much for having me.
So what will you be monitoring most closely during today's session?
You know, unfortunately, we're stuck in a universe where everything else that comes in terms of near-term catalysts get ignored, and we pay 100% of our attention to what we think, where we think we are in the process of getting out of this Iran war, right? So we look, you start every morning for the last 4 weeks, and this will be the 5th week where you look at the price per barrel of oil, you look at True Social, find out what's been said, how much of that we can actually believe and take seriously, and then hope for some getting closer to that off-ramp. Because unless and until we get to a place where the Straits of Hormuz is open and we start to see oil recede, this market's going to be frozen in place. We've got, we've tried to price in as rapidly as we can the cost of all this, but it's all about duration. So the longer this lasts, the more economic damage that we potentially have. So unfortunately, in a week where you and I would normally be talking about the jobs report coming out on a Friday when the market's closed, or the rest of the data, the 6 Fed speakers, which might be interesting to us, everything's about where we stand with the war and how close we are to getting to the end of that.
And as you touched on in your first answer, fluctuating oil prices have driven the market. What needs to happen before the recent market choppiness ends?
Well, we need to see the Straits of Hormuz open, so we're not in a deficit right now. So we lost about 15 million barrels a day. Some of that's been made up with Saudi Arabia able to get to the Red Sea, but that's only making up about 30% of that. So we're in a deficit. That's going to put upward pressure on energy prices. That takes longer to percolate into GDP, but it will. And then further down the chain, everything that is has a base of petroleum product that comes out, whether it's fertilizers or plastics and the rest of it, we'll start seeing increasing pricing. So that upward price increase is going to slow down consumer discretionary spending at some point in time. And it's really a function of how long these prices remain that high. So for us, it's all about duration. So far, enterprise sentiment has remained, manufacturing sentiment has remained relatively robust. The consumer will likely start to fade and probably made a lot of decisions about not spending this month, especially in the all-important spring break season. So consumer discretionary is one of the worst performing sectors. And then we're going to work our way into earnings reporting season. We'll have to wait and see how many people that report in the S&P 500 talk about input prices, especially petroleum products and delivery charges are eating at their margins.
Yeah, and speaking of, how is the oil choppiness impacting the average American? Is it at this point?
Well, I'll tell you this. There's 2 things that go on with energy prices, right? First, it's the best advertised form of inflation because we drive by gas stations all the time. You know that 4 weeks ago you were paying less than $3 a gallon, and now you know you're paying close to $4 a gallon. So that actually encompasses or occupies a lot of the mind share of consumers, right? You don't like that. Nobody likes inflation, and nobody likes the inflation that they have to look at every day as they're driving down the road. The flip side of that is, in terms of how much we use, of total spend for consumers 15 or 20 years ago would be 12 to 14% energy output. So 14% of your wallet was energy cost. Now it's 4%. So it's much less of your wallet share, but much more of your mind share, and that affects decision making. So, you decide not to take a trip to Disneyland or not to buy that new sweater at the Gap, and that actually has an economic impact, even though the energy intensity by American consumers is far less today than it was even 10 years ago.
All right, and Fed Chair Jerome Powell and New York President John Williams are going to speak today. What are investors going to be listening for most closely?
I think Chair Powell has done a great job and likely will continue to kind of keep the ball in the middle of the fairway in terms of, yes, we know energy prices are higher. No, we don't know how long that will last. And so therefore, the Federal Reserve, it feels like they're comfortable in the place they're at with monetary policy. I think they'll continue to say that. They'll also talk about things like demand destruction. Jay Powell got into that in the presser, answering a question about, is there an offset to this? If energy prices rise to a certain level, does demand get destroyed? And then that, sort of alleviates some of that pressure. While that's true, it's not as true as it used to be 10 or 15 years ago when there was more elasticity to demand. So I think Chair Powell will talk a whole lot about what we heard about in the press conference. We're watching this closely. We don't have control over it. While we don't have control over it, the Fed is likely where they are for the time being. And hopefully he doesn't talk about the potential for rate hikes, which are starting to get priced in the Fed funds futures markets.
Well, I was going to ask you, what is your prediction for the Fed for 2026? Do you think we're going to see a rate cut or perhaps a rate hike, as you just mentioned?
I would tell you this. If we get to an off-ramp in the Iran war and we retrace maybe half of the upward move in energy prices by the end of the second quarter, I think by the end of the fourth quarter, the Fed will likely be in a position where they can cut rates one more time this year. So I think all things equal, if in fact, let's say in another 5 weeks, we are no longer talking about energy prices and we go from, call it $95 back down to $75, which would be $10 higher than the war started, but $20 lower than where it is right now. I think the Fed would look at that and say, okay, that piece of the inflation picture is actually transitory. And it was because it lasted 10 weeks. Therefore, we can look at the rest of the picture and determine what needs more defense. And I would argue that their full employment mandate needs more defending than their inflation mandate does right now. They'd likely see their way clear to cut rates at least one time by the end of this year and maybe perhaps another one or two times next year.
All right, and shifting gears a little bit, AI has been a market mover for well over a year. What other sectors, though, are you looking at that are interesting to you?
Yeah, I'll tell you the three sectors I think are the most interesting right now. Oddly enough, industrials continue to be acting very well, and they should be because they're a big part of the AI revolution, right? The build out of data center is part of that, but aerospace and defense is also in the industrial sector, and we have a massive amount of infrastructure work that's going on right now and funded. So I think industrials sit in a very good place. I think the most interesting of all the sectors, the 11 sectors in the S&P 500 right now, are the financials. The financials are going through two different things at the same time. They're facing this onslaught of concerns over private credit and private equity and exposure to that. At the same time, we have a yield curve that was steepening before the war is flattening out. I think, again, very much like energy prices, if in fact we get to the other side of this, you'll see that steepening yield curve. You'll see less regulation, lighter regulatory touch for the financials. You'll certainly see that part of the concern about private credit shouldn't spread through the whole of the financial sector. They just trade as a sector. So the money center banks like JP Morgan and Citibank and Bank of America are falling under the same brush as Apollo and KKR and Blackstone, which shouldn't be the case, nor should it be the case for Visa, MasterCard, and American Express. So I think the financials have a big chance to rebound soundly in the second half of this year. The other one I throw out to you is healthcare. Healthcare has not performed well. It typically does perform well in the economy, the kind of economy we have, and it's actually less dependent on energy prices. So higher energy prices, if you're paying $5 at the pump, you're still going to go and get your shoulder replaced.
All right, thank you, Art Hogan, Chief Market Strategist at B. Riley Wealth Management, for joining us.
Thank you.
Coming up, Kristen Scholler sat down with Howard W. Buffett, grandson of the Oracle of Omaha, to discuss how Holganics is revolutionizing soil and agriculture. Stay tuned.
It means so much to stand here today on International Women's Day at the New York Stock Exchange. When I look around this room at the leaders, entrepreneurs, advocates, and change makers, I feel something powerful. True power isn't just building something for yourself, it's building something that lifts other women up. That's why I'm using this platform to highlight women-owned small businesses. Gloria once said that dreaming is a form of planning. I dreamed of building something of my own. Today, that dream has become a responsibility. Because the future of finance, leadership, and this economy is unapologetically female. I'm looking forward to ringing the bell and celebrating with you all afterward. Loves it.
We literally have changed the entire baby food industry. To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. Holganics is on a mission to bolster soil health and is working with American farmers to revolutionize the way crops and plants are grown. Howard W. Buffett, its advisory board chair, recently joined Kristen Scholler on the NYSE trading floor as part of a limited series to discuss his journey in the industry and the importance of agriculture as a whole. Take a listen.
I was born in Nebraska. I grew up farming with my father, and so I have a very personal connection to soil and to the land. And it really taught me a lot of values like stewardship and valuing the long-term appreciation of assets as well. And so that was really a framing I had from childhood. I was in Future Farmers of America and was the state soil judging champion. So this was something that I really grew up with. That said, we also, I got to see it from an investment perspective. My grandfather had bought that farm in 1986 when I was 3 years old, and he did it because he thought that the potential value would go up over time. In fact, he wrote in the Berkshire shareholder letter in 2013 that this was an investment that had basically no downside, and he had commented that it had increased its earnings by threefold and had increased in value by fivefold during the time in which he owned it. So he'd really recognized the intrinsic value of farming and soil. Now, going beyond that, I'll say throughout my career, I had the opportunity to see it as more than just an investment, but to realize that soil is something we interact with every day. Every single person, whether it's direct or indirect, it supports life, it provides the food that we all eat, and it's something that we should treat as infrastructure because we really do rely on it from a global perspective. That said, like any infrastructure, soil as an enabling platform can also fail in the future. And it's something that we need to be aware of because that does create serious risk.
Where do we stand with soil now? Is it in a good place?
Well, that's a wonderful question. I'll turn it back to you first and say, how often do you think about soil?
Sometimes with my house plans in my apartment in Brooklyn.
Okay, fair enough. I think that for most people, it's probably not very often. And I think it's fair to say that, soil really is a finite asset. Now, when we're here on Wall Street, we think about things in a kind of a quarterly basis, but soil degrades and fails generationally. So it's a very different timeline. And when you think about that as, say, the erosion of an asset over time, it can reframe the way that you consider how you want to invest and preserve that asset. The other thing that we can think about with soil is that It's sort of like having a bill that you don't know when it's going to come due. Or imagine you're running a business and you take out a large loan, but you don't know the size of the principal, you don't know what the interest payments are, and you don't know when you have to repay that loan. That would never work in business. And in part, we're sort of treating soil in a very similar way. That said, there are some important solutions that exist. And so one thing hopefully we'll be able to talk about is how regenerative systems can be used to re-enrich soil so that we can think about the role that it plays throughout value chains, both at the beginning of the value chain for farmers, but then at the end of the value chain for global corporations that rely on farmers and their outputs for the products that they create and they deliver.
If you had to sum up the core problem with soil right now, what would you say?
The primary issue with it is just that folks interact with it every day, but don't actually think about it. And so when you've got an asset that's failing over time, and you have a set of policies, if we think about our national policies that aren't necessarily treating soil like a true piece of infrastructure that we have in order to support our country, that's a big challenge. And one of the key policy areas we need to think about is how do we incentivize farmers to adopt more conservation-based practices in the way that they treat, again, their most important asset that they have as well.
Your work has taken you beyond Nebraska, which I believe is where you spent at least some of your childhood. What did that change for you?
Well, a lot. I'll start by saying I had a grandmother and a grandfather who were incredibly philanthropic. And as part of that, they created charitable foundations for each of their children. And because of that, my father's foundation, it meant that he and I had the opportunity to travel around the world, far outside of Nebraska, to look at challenges that individuals were facing, all over the place, what communities were suffering from, where we could try to find solutions and make a difference for these folks. And over time, that foundation was really focused on the most marginalized and impoverished populations globally. So we were traveling to some of the harshest places on earth. I think by the age of 20, I had traveled to 60 countries with my father, trying to really see what was going on in these places and where we could make a difference. And the big thing I learned from that is that agriculture really is a way of survival for most people around the world. We have hundreds of millions of smallholder farmers who depend on the production of their land to survive, or maybe they produce just enough that they can enter into markets and sell. And so their livelihoods also depend on this as well. And so I think, one thing about that was that I began to see that pattern over and over again and realize that farmers have to treat their farm, their production, and they have to think about it in the very same way you might think about this in business. What are things that save me time? Where can I cut costs? Where can I reduce risk? How can I increase resiliency in my production? Because they were so reliant on that as part of their livelihood. And so when you think about all the way from the micro scale of an individual farm to sort of the macro scale of the global production that's going on, there's so much that relies on this infrastructure that we have right under our feet.
You have linked food to stability and security. What is that connection?
Anytime you have instability around food or the availability of food, you have a higher potential for unrest or risk. And historically, we have seen that as food prices cross a certain level called the food price crisis threshold, outbreaks of violence occur in different parts of the world. We saw this in 2008, 2009 with the Arab Spring, but it's happened over many times over the last hundreds and hundreds of years. Now, I will share that this is something that I saw firsthand back in 2011. I worked at the Defense Department, was doing a lot of work over in Afghanistan, working with smallholder farmers throughout the country. This was a part of the world where a third of the GDP was based on farming, 2/3 of all employment was farming, and over 2/3 of all exports were based on agriculture. So this was a country that really depended heavily on the productive capacity of their soil. And I have to tell you, when I worked with those people, all the way from an individual farmer to a community shura to a female entrepreneur in Western Afghanistan, they had so much potential. And the ability for us to go in and unlock some of that potential by helping them get more out of their soil and treating it like a living organism almost, really meant that they could thrive in an environment that otherwise was suffering quite a lot. And for us, what that led to was more predictability, more economic stability, and less likelihood that there would be any challenges related to national security as a result. So all of these are linked very, very closely.
Let's talk about some of the soil solutions that you referenced earlier. Obviously, things that I'm sure you believe business leaders should have at the top of their minds. How should they go about that?
If you're running a business, or let's say even if you're in a corporate boardroom, some of the questions you might want to be asking are, what is my company's footprint? What is my exposure to natural resource limitations? And how does this affect my license to operate? Now, I'll get to your answer in just a second. But I think what's really important to consider about this is there's all of these different pressures that are on business. And to your point, they do need to find solutions that will help them address these. We've got the science-based targets initiatives that are coming up in 2030. We have over 12,000 companies who have taken commitments there. We have CORSIA, which is a global policy affecting airlines and transportation. So there's a lot of these pressure points that are coming together at the exact same time that companies have to be responsive to and find solutions for.
Thanks, Howard W. Buffett and Kristen Scholler for that interview. Coming up, a new study by Ramp shows that one AI platform is gaining momentum among businesses. Find out which one when we come back.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by Direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Earlier this month, financial operations platform Ramp published new research showing that more than 47% of businesses had paid subscriptions to AI models or platforms in February. But that's not all the data showed. Joining me now for more on this is Ramp's economist, Ara Karazian. Ara, welcome to the New York Stock Exchange.
Ashley, thank you for having me. It's exciting to be here.
All right, so this report or this research showed that half of businesses had subscriptions to AI services. Can you tell us more about that?
Yeah, well, look, AI is this transformational technology. There's a lot of hope that it's going to be the thing that's going to vault us into the next productivity boom. And yet there's very little economic data to support whether or not businesses are actually benefiting from this type of thing. We haven't seen any solid GDP numbers come out. It's not like unemployment's moving that much. So everyone's looking around, particularly in the market, for what data sets they can use to measure, hey, are businesses gaining from this kind of technology? Are they even using it? So that's the focus of our research. We're business spend platforms, so we see where companies are spending money and making those investments. In our data set, we saw not only that there was a significant run-up in AI adoption in 2025, now reaching to about 50% of businesses in the US, but there's been a significant change in the competitive landscape of these AI models. So if you looked a couple months ago, OpenAI was the definitive leader. That's now started to switch in the past couple months. Anthropic has now become a new default for businesses that are buying AI for the first time, winning about 70% of matchups one-on-one against OpenAI. So that's the new thing that's happening in this market. It's that there's not only just this run-up in AI adoption, companies are increasingly buying more models and buying them from more companies, but the leadership is starting to shift as well.
Why do you think you're seeing, or we're seeing a spike in Anthropic versus OpenAI?
Look, these are two companies that had very different business strategies from the start. In many ways, OpenAI, which, to be clear, is still used by the most businesses in the US, it's still the most popular AI model, had a significant distributional advantage almost by being the consumer default. If you were a business buying AI for the first time, you're likely to buy ChatGPT because that's what you were aware of as a consumer. So that was OpenAI's distributional advantage. Get into the corporate market by starting with a strong consumer brand. Anthropic had a very different strategy. Anthropic initially targeted businesses and particularly targeted high productivity users. And we believe these are the users that ended up becoming these evangelists at companies. So they developed a really solid coding product that was Claude Code, one of the most popular coding agents now on the market. They've now since started to strategize differently and move more into a consumer market. But they've done it by leveraging those evangelists in the corporate market first. So now they're launching their own consumer play. Claude Cowork is a product that's sort of broadly competitive with OpenAI's consumer offerings as well, and is also seeing an increase in popularity.
Do you think it's a challenge for large enterprise organizations to launch AI company-wide on a large scale?
Yeah. Well, so when we talk to businesses on our platform about, again, less than 50% of businesses have even paid for AI services on our platform. So there's a lot of room to grow. So when we talk to businesses about why they haven't started using this technology at all, there's a couple things that comes up. One, there's a significant trust issue, particularly if you're a large enterprise and you want to implement AI at scale across your organization. You kind of have to make sure it's right. Like before you implement some AI voice agent to automate your customer service operations, you have to make sure that agent is not going to make promises it cannot keep to customers or say something and run wild. So there's that trust issue. Second, I think there's an issue of not really being sure where to start. This is a market in which it is really hard to make that's what seems like a very simple buying decision. What AI model should I buy? But it's not just about what company should you buy it from. It's how should you implement it across your organization. For a lot of these companies, it starts with a chatbot. But what we're finding in our research is that as you mature as a company on the AI adoption curve, you move beyond the chatbot into software that is actually productivity enhancing. And so there are companies that are developing software that's targeted toward a specific vertical, something like it's targeting customer service operations or it's targeting the finance operations of a firm. That's where the real productivity gains tend to be. But if you're a consumer or a buyer who has only interacted with the chatbot, you're not necessarily aware of how this market is developed. And so that tends to be the big blind spot for businesses and procurement managers specifically at these firms.
All right, thank you so much, Ramps economist Ara Karazian, for joining us at the New York Stock Exchange.
Thank you so much. Thank you.
Don't go anywhere. Women in Financial Markets will ring the opening bell up next.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto."
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment, Women in Financial Markets will ring the opening bell as we round out Women's History Month. The organization, which was established in 2007, says it is on a mission to connect, elevate, and advance professionals in the financial services industry through education, coaching, and mentorship. Take a listen. Financial markets ring the opening bell. This is to round out Women's History Month with end tomorrow, March 31st, and stock markets are officially open for trade. Joining me now is Greg Farinello, Executive Director and Head of U.S. Rates at Ameribet Securities. Greg, welcome to the New York Stock Exchange.
Good to see you, Ashley.
All right, so the session just kicked off. What are you going to be looking at most closely today?
Well, first of all, women in financial markets is completely important, and I'm so happy with the progress that we've made over time with that. In terms of financial markets, I still think we're looking at the Middle East. I mean, that is really what it comes down to. The markets have been extremely volatile. I think the news flow has been extremely volatile. We have central banks around the world that are pricing in rate hikes now around this. The Fed has been priced out for 2026 to come down in 2027, but we still see volatility ahead.
Major averages coming off of 5 straight weeks of losses. Do you think things are going to get worse before they get better?
I think they could. And look, I am an optimistic person in general. And I think if you're a long-term investor, you want to stay invested. Certain sectors have been beaten up a little bit more than others. Having said that, if you look at the charts, you look at the broader indices, you know, we've broken through some levels here, and there certainly could be some downside ahead, but that doesn't mean you have to capitulate and get out. I think ultimately these will be buying opportunities. If you look at last year at this time, if you look at April, you look at the drawdown, I mean, we could certainly go down more in terms of the averages, but ultimately I think that will be a good buying opportunity.
Why do you think buying the dip is a good opportunity?
Well, it depends where you buy the dip, right? So right now, we're in the thick and weeds of things. So you need to pay attention, you know, depending on what you own, depending on what the indice is. But I ultimately think buying the dip is a good opportunity because I think the economy is still in pretty good shape in general.
That's right. You are pretty constructive on the economy. What is your outlook for the next year for the economy?
I think the economy is going to be fine. I mean, and it depends a little bit, right? I mean, if you look at energy prices in general, if we continue to stay at these levels, if we continue to move up, we could hit a recession at some point. I think it will be a shallow recession, but energy prices are going to play a factor here. There's no question about it. I mean, I got my home heating bill a week ago. I was in the 4s, now I'm in the 6s, right? So people are going to feel this pinch. There's no question about it. You're going to see the inflation numbers tick up in the coming months, and you're likely going to see the growth numbers come down. So we're going to have to wash that out. But ultimately, I think the policies that are in place, I believe in the president, I believe in his policies, and I think we're going to be okay, but we may need a little bit more time here.
And I understand, as you just mentioned, inflation, you think it may stay elevated. How much do you think it can climb?
So we could certainly climb into the 4s on a headline, I think. in terms of core where they strip stuff out. But the headline inflation numbers are certainly they're gonna creep up here. There's no question about it over the next couple of months. And people are gonna feel the pinch. I mean, the general consumer is going to feel the pinch from this. I think the president is aware, and we'll see where it goes. You look at energy prices this morning, we're moving even higher. So there's some things that can be done. There's some things that can't be done. But I think ultimately this comes out of growth. It's an inflationary pinch, but it's ultimately, I think, a growth story for consumers.
And Fed Chair Jerome Powell and New York Fed President John Williams will speak today. What do you think investors are going to be listening for most closely?
I think the Fed's on hold here. There's no question about it. I mean, if you listen to every Fed official, and I can't really blame them from being on hold here. I mean, they're balancing growth, they're balancing inflation. They're going to tell you that they're on hold. And if anything, we're pricing, if you look at the forward curve, we're pricing in slight rate hikes in 2026 from the Fed. I don't think rate hikes, personally, I don't think that's the answer for any central bank around the world, because I think the higher energy prices will ultimately come out of growth. I think if central banks start to hike rates on top of that, we're going to move into a recessionary environment.
How do you think a rate hike could impact the everyday American?
Well, rate hikes right now, I mean, I think we should have rate cuts, personally. I mean, that's my view. But rate hikes, the everyday American right now, I mean, I think in particular in the U.S., we need a lower rate structure, not a higher rate structure. If we start to hike rates on top of this, it's going to make things even worse, in my view. It's not going to bring... If you look at the dynamics of why energy prices are moving higher right now, it's so far away from central bank policy. So if central banks start to hike in this environment, they're going to make things even worse than what's coming, which are higher energy prices.
All right, Greg Farinello, Executive Director and Head of U.S. Rates at Amerivet Securities. Thank you so much for joining us at the New York Stock Exchange.
Great to see you, Ashley.
Great to see you. In other news, the latest episode of the Inside the Ice House podcast was released earlier today. Host Lance Glynn spoke with Megan Tennell, CEO and President at the Association of Equipment Manufacturers, during the recent ConExpo ConAg event. It was billed as North America's largest construction show. She shared how she and her team are shaping the direction for those working in construction and manufacturing. Take a listen.
We are this little association based in Milwaukee, Wisconsin, but our reach is pretty far. While we are North America based, we have, the U.S., Canada, and Mexico. Our membership is a global membership, and everything we do is for the industry and by the industry. So an event like this, ConExpo ConAg, is actually organized and run in collaboration with our members and with their customers. Really important to us, whether it's with this event or you'd mentioned advocacy, is that we work industry-wide. So we have great partners with other associations that might represent the materials used in construction or the contractors that are doing the work. And collaboratively, we sit up on these management committees and these committees to help drive the direction of the show, set the goals, set the vision, and then it's AEM's job to really make it all come to life.
As the episode continued, Tennell spoke to the importance of collaboration across the industry so that construction and manufacturing could better serve communities across the globe. Check it out.
Part of our job as an association is to work with, whether it's the administration or the regulators, on how we can collaboratively get to a better place, right? So when you talk about engine emissions, we sit down with the EPA and share current state, future state, how we can get to the next gen of engine or whatever it might be if you're talking emissions. And it's really, I think it's really the best way to go. We don't ever want to go backwards. We want to keep going forwards to make sure that what we're doing is good for the environment and good for future generations. And I think the most important important thing is having that open, collaborative conversation using data as to why certain things are the way they are and how we can move forward, whether it's with alternative fuels, alternative energy, or various different materials. You know, we're working together to make sure that we can recycle everything that we can and leave this place better than how we found it.
Later in the conversation, Tanel gave her thoughts on the industry's evolution and how through overseeing AEM, she's going to continue to fight for its betterment. Take a listen.
Working in an industry that has such history and it's not going away, but seeing how much it has morphed and changed. You know what, this perception of dirty or dangerous is so in the past, and what we're looking at moving forward is clean materials, is supporting the environment, is leaving things better than how we found it, and engaging with people of all walks of life. And it's an industry that goes around the entire world. Everybody needs to have these safe roads and bridges, and it's kind of cool to think how we're connected in that way. So I love seeing the evolution of the people, of the materials, of the focus. And for right now, I'm really enjoying this effort towards collaboration and to work as a united front as an entire industry.
Thanks to Megan Tanel and Lance Glynn for that interview. Tune in each week for new episodes of the Inside the Ice House podcast. You can watch and listen wherever you get your podcast. You can also find episodes by scanning the QR code that you see on your screen. Well, still to come, a new study from NYSE-listed Robert Half dove into how AI is impacting the job hiring process. The person behind the research tells us how new technology has impacted the hiring process from start to finish. Meanwhile, the NYSE sponsored the Hill and Valley Forum in our nation's capital last week. Kristen Scholler spoke with several leaders, including National Cyber Director Sean Caron-Cross, who shared new details about the White House's latest cyber strategy. And we'll continue to deliver the latest updates on market activity as trading gets underway. Investors are navigating the latest headlines surrounding the Middle East while awaiting Friday's jobs report. Stick around.
So honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Earlier this month, NYSE-listed staffing services firm Robert Half released the results of a new survey exploring the impact that AI is having on the job hiring process. Joining me now is Dawn Fay, Operational President for Robert Half. Dawn, welcome to the New York Stock Exchange.
Thank you for having me. It's great to be here.
All right, so survey, AI, job hiring, what were the most surprising results to you?
The most surprising results is just how much extra work there has been put on human resources and recruitment teams at organizations. 84% of them say that there has been an increased workload due to AI-generated resumes.
So can you tell when something is AI generated if you're receiving a application? Like, do they look similar? What are the characteristics?
Yeah, several of the red flags are similarity. When those resumes come in and they appear just like the job description, basically looking like the perfect candidate, having everything that's in that job description. There's really no such thing as a perfect candidate, so when things line up a little too much, that's a red flag that it's probably been very generated by AI and not a lot of authenticity in there.
And how is AI changing both the job search and the hiring process?
So from a job search standpoint, it's been easier to find those jobs, find information about organizations, and also to apply to those jobs. But that's what's causing sort of the overwhelming influx of resumes on the client side. And then individuals that are using AI maybe a little too heavily and having them really look like the job description is making it very frustrating for people to review those resumes to find out what skills do those candidates really have.
What can people do to make sure that their resume stands out in a way that it still has a human touch?
Yeah. Well, that's the answer, right, that everybody needs. So AI is a great tool to be a support tool to help you with grammar and formatting and really sharpening your message. But you want to make sure that you've got your real accomplishments in there. That's what's going to set you apart. So having those real examples of things that you've accomplished, whether you've helped drive sales by a certain percentage, did you deliver a project under, time frame and under budget, things like that are very specific accomplishments to you will make you stand out.
And how are applicants misusing AI?
They're overusing it. When they use AI and don't actually check the work, there are some AI tools out there that will take your resume, change it for each of the job descriptions you're applying to, and then sort of mass apply for you. You want to make sure that you know what is actually going out to potential employers. You want to make sure it's accurate and authentic for you and your skill set.
Do you think it can, harm you if you're applying for a job and a recruiter sees your application and it really looks like heavily generated by AI? Do you think that could be a disadvantage in the job application process?
There are certainly anecdotes we've heard where some individuals think if it looks too perfect, they don't even want to talk to the person, which sounds counterintuitive. So you really want to make sure you're having that perfect blend of using it to sharpen your message, have your authentic accomplishments that are in there. And on the other side, when you're looking for those perfect candidates, the right candidate, you want to make sure that you're having conversations early in the process so that you can communicate with people and not just have your bots kind of screening bots, if you will, right? Communication is the key, and that's when people are really best able to vet out individuals.
So I hear you say it's advantageous to use it sort of like as an editor rather than just write the whole application. What are some other ways, besides adding your own unique flair to your resume, any other ways that applicants can stand out in this AI-dominated world right now that we live in?
It certainly has been dominating the conversation for sure. It's really important for individuals to have a strong network. See if you can find somebody within the organization or somebody that you know that might know somebody in the organization that can put in a good word for you. That can actually really help you stand out. And by the way, be persistent and communicate as best you can with that company as well too, whether a phone call, whether an email, showing your interest, and that might actually set you apart as well too, just that you've kind of taken that extra step to show you're really interested in the opportunity.
And what's next for Robert Half? Any more surveys that you're working on? Any more AI research?
Yes, we are always doing lots of research around what are the changes that are happening in the job market today because of AI. It's certainly been augmenting roles more than it's been replacing. So we're really keeping a good pulse on that to see what are some of those new emerging roles that are out there right now as technology continues to develop and advance. So we'll keep you posted.
All right, Dawn Fay from Robert Half, thank you so much for joining us at the New York Stock Exchange.
Thanks for having me. I appreciate it.
Thank you. Coming up, the Hill and Valley Forum in our nation's capital brought together many influential leaders. Hear what National Cyber Director Sean Karen Cross told Kristen Scholler about the U.S.'s new game plan to protect against cyber threats. Up next.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. And we've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. The NYSE sponsored the Hill and Valley Forum in Washington, D.C., which took place earlier this week and gathered leaders across government, technology, and industry. Our Kristen Scholler was on the ground and spoke with several of these leaders, including National Cyber Director Sean Karen Cross. Here's what he told her about President Trump's new cyber strategy.
The president just announced a new national cyber strategy, and part of that is a close collaboration with industry and making sure that we're clear about the partnership that we have been pursuing since the president came into office. And so this is a great opportunity and a great forum in order to carry that message.
For anyone who hasn't consumed that national cyber strategy just yet, what are the high-level takeaways?
The high-level takeaway is the United States government is seeking to stand cyber up as its own domain, not something that's adjacent to others, but something where the whole of government can be used to impact strategic goals in this space, and this space can be used to influence strategic goals in other space. And key among this is shaping adversary behavior, which is for too long, this has been an asymmetrical battle where the rewards for attacking the United States in this space haven't carried a consequence that has had an effect on behavior. And so imposing consequence in a way that changes the risk calculus across the ocean is important.
Why does this matter now, given the global backdrop?
Sure, it matters now. It's an important time as new technologies, as artificial intelligence is employed, as agentic agents come into the fold. We're seeing these sorts of attacks start to scale and become more sophisticated. And the moment is now to make clear to those who are engaged in this behavior that if you seek to harm Americans or American interests or American industry, you stand to face an American consequence.
What role does industry play in this?
Yeah, well, industry, Kristen, as you know, is responsible for operating, maintaining, and defending our critical infrastructure system, things that everyday Americans depend on in daily life. If you're on an interconnected network, it is run by the private sector. And so they bear really the full weight of adversarial attacks in this space. And they shouldn't be expected to defend themselves against the Russians or the Chinese or the North Koreans or the Iranians. That's the job of the United States government. And in order to do that, we've got to work in close partnership. So we are looking to engage them full speed. There's been a high degree of enthusiasm for this across industry, which has been extremely gratifying to be part of the conversation. And we're looking forward to getting this moving at full speed.
How does this bridge between the Hill and the Valley benefit this administration?
Yeah, of course. Well, this is, like I say, a terrific forum for this conversation and bringing together thought leaders in this space, industry who are the command and control in industry who do this day in and day out, to make sure that the signal's being sent, that the relationships are being built, and that everyone is communicating. I mean, so often people don't talk to one another, and this administration isn't like that at all. We will pick up the phone, and we expect input directly from folks, and that's the message we're here to convey. That's what we've been conveying, like I say, since the president took office. And I think it's so far met with a great degree of success.
Yeah. And to that end, is there any more input from the private sector that could help?
Sure. Well, there's a couple of things I would say. The talent piece of this and the workforce piece is important. There's a gap right now in the need for cyber operators, and that's training and investment. The president recognized in term one that America's cyber workforce is a strategic asset that's worthy of investment. So much of that is working hand in glove with the private sector. So we are looking to scale programs that train people, that put people on target in jobs that they are ready to handle, and then pair that with an economic incentive to get a real startup community rolling. That's where the economic incentive is aligned with the patriotism incentive.
Anything more viewers should know about the future of cyber?
Well, I think the future of cyber is the president is making clear that American dominance, whether it's in energy or in cyber, that America will control its own destiny. And the time to do that in this space is now. And I think that's what the president is stepping forward to do and making the hard decisions to do it. And we're just happy to be a part of that process.
Thanks, National Cyber Director Sean Caron-Cross and Kristen Scholler for that interview. Before we go, let's take one last look at the markets. The S&P up about 0.3%. The Dow up about 0.5%. It was in correction territory on Friday, down about 10% from its all-time high. So we are fractionally higher less than 30 minutes into today's session, where markets remaining volatile amid the ongoing uncertainty surrounding the conflict in the Middle of the East. Oil prices are continuing to swing. Currently, benchmark ICE Brent crude is trading above $115 a barrel. That's going to do it for us on NYSE Live. We'll see you tomorrow.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?